everyone, welcome to EduTap. So in today's session we are going to discuss a very important finance news article that is regarding the Financial Inclusion Index. So the Reserve Bank of India has recently released the Financial Inclusion Index in August 2022, and this is the index that is for the March 2022. So we will see that what is this index, what are the broad parameters of this index and what this index tells us. Okay, and the index has rose to 56.4. So what was the index before, how it has risen to 56.4, everything about this index we are going to discuss in today's session. So now before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session, and you can get the link of the Telegram channel in the description box below. So now starting with, the RBI has released the Financial Inclusion Index for the March 2022 and it has been released in August 2022. Okay. So first of all, the RBI has constructed a composite financial inclusion index to capture the extent of the financial inclusion that has happened across the country. So financial inclusion is a very important term both for RBI, NABARD or any other government exams. Okay. So financial inclusion is a much focused area from the RBI, from the government also. What is this financial inclusion now? So the World Bank has defined it, or we can say in the World Bank website, the definition of financial inclusion was this: that individuals and businesses have access to useful and affordable financial products and services. Financial inclusion means that even the far off area should have the financial services, should get the financial products, okay, that meet their needs for the deposits that they want to do, if they want to do the savings, if they want to do the transactions, if they want to do the payments, if they want to take the credit or insurance. These financial needs of the people should be fulfilled even of the far off areas. Okay, the individuals, the businesses in the country, they should have the financial access. Okay. That should be useful and affordable. So delivered in responsible and sustainable way. It's not like once you are giving the business the credit facility and everything and after that you are just leaving that business. No, it should be in a sustainable way. It should be available with the persons. It should be available with the businesses. It should be available with the people of the country 24 hours and 365 days. Okay. So that is in a responsible and sustainable way. They should have the access to everything, all the financial services. So that's why through this index, through the Financial Inclusion Index, we try to see that how many people in the country, how many individuals or businesses in the country, they have the financial inclusion. They get the financial inclusion in the country. That is, they have the access for the financial products and services. So you have seen that the financial products are such, okay, that are the transactions that they can do through the banks, payments that they can do, savings that they can do with the banks or the post offices, the credit is there, the insurance is there. So in consultation, this Financial Inclusion Index has been constructed by the Reserve Bank of India in consultation with the concerned stakeholders, including the government, because there are different facilities, different financial services and facilities that is provided by different stakeholders that you can see. The Financial Inclusion Index has been conceptualized as a comprehensive index because it includes such major products and services. So it is a comprehensive index incorporating details of banking, investments, insurance, postal as well as pension sector in consultation with the government and respective sector regulators. Okay, because like the insurance sector is there, the IRDAI is the head of that. So there are different, the banks are there. That the RBI is the head of the banks, and the investments segment is there, the NBFCs are there, the RBI is the head of or the regulator of the NBFCs, as well as the SEBI is also the regulator of some of the NBFCs. So those regulators come together and they consult, they talk, and the Financial Inclusion Index is created by seeing the data from all these segments. Okay, because financial inclusion means that the financial services, the financial products are being provided to the people of the country, even in the far off areas. Okay, the more people get the access, the more financial inclusion there is. Okay, the more people using the financial services and products, the more financial inclusion we can say. So the FI index, the financial inclusion index, has been constructed without any base year. This you have to remember. In the digital payment index, I told you that usually the conventionally what happens that there should be a base year for the index to be constructed, but for the financial inclusion index there is no base year, and as such it reflects cumulative efforts of all stakeholders over the years towards financial inclusion, because the banking segment is there, the investment segment is there, the insurance segment is there, the credit segment is there, the NBFCs are also providing credit. So different stakeholders are providing different services and they are moving the country towards the financial inclusion. Okay. So now moving forward, what is the data for this year? The index captures information on various aspects of financial inclusion in a single value. So through a single value that we saw, that was the 56.4, through this single value we are trying to see that how much financial inclusion has happened into the country. So this single value range between 0 to 100, where 0 represents that there is complete financial exclusion. There is no one that is getting the financial products, there is no one that is getting the financial services. 100 indicates that all the people, all the businesses, everyone is getting the full financial inclusion into the country. They are getting access to the financial services, financial products. They are using the financial services, financial products, as well as those services and products are of quality. Okay. So the value of financial index for the March 2022 stands at 56.4 against the 53.9 in March 2021. So if we compare it with the previous year, you can see that the growth has happened in the financial inclusion. There is more financial inclusion in compared to the previous year, as well as with growth witnessed across all the sub indices. So there are sub indices in the parameter, like this in the financial inclusion index has different parameters. Okay, so all the sub indices has seen the growth. We will see that what are the parameters. Okay, it was at 43.4 for the period ending March 2017. So by March 2017, not even the half of the population was getting the financial inclusion, we can say, but it has been continuously growing, you can see, and showing rapid improvement in reach of the financial services. The reach of the financial services has increased because the data has increased from 43 to 54, I can say, to 56 in approximately. Okay. Over the past 5 years, the data has continuously improved, shows the reach of the financial services that has increased. So now coming to the construction of the index, all the sub-indices under the financial inclusion index, it has seen the growth. So what are the broad parameters of the financial inclusion index? So there are 3 broad parameters of financial inclusion index. They are the access, usage and quality. So financial inclusion index tells us that the people are included or not. That is, they are getting the access of the financial products or the financial services, they are getting the access or not. Now if they are getting the access, are they using it or not? Usage is there or not? And the quality, like the consumer protection is there or not, the consumers are getting quality products or not, they are getting the equal services or not. Okay, they are facing any inequality or something. So these are the broad parameters of the financial inclusion index. They are getting the access, usage as well as quality products and services, quality financial products and services. Okay. Now let's see the sub parameters of these 3 parameters. So you have the clarity, that what they include. Okay, and the highest weightage is given in the index to the usage. In the financial inclusion index, the highest weightage is given to the usage, then the weightage is given to the access, and then the quality. Okay. So here are the sub parameters. The access tells you that there are the physical points of service, like the banks have the physical infrastructure, the NBFCs has the physical infrastructure, the insurance companies has the physical infrastructure. They have the digital points of service or not. Most of the banks have their mobile banking apps. Okay, most of the NBFCs also have the their apps or something through which the digital services can be provided. Usage means bank accounts, formally banked accounts are there, people are using those accounts or not. Adults with credit at formal institutions, they can get the credit and they are using the credit services. Adults with insurance, that how many adults are there that are getting the insurance, so how many people are using it actually. This is access, that they can access it or not. Usage means they are actually using it or not. Okay. Cashless and mobile based transactions are happening, how much they are happening. Frequency of account usage, the remittances they are doing, how much money they can get out, okay, get from the banks. The quality, financial literacy is there or not, the people are becoming aware about the financial products and services or not, the banks or the other stakeholders are doing something for the financial literacy or not, the capability is there or not of the banks, of the other institutions to for the quality, the grievance redressal, the customer protection is there or not. So these are the measurement of financial inclusion, quantifying key parameters to assess the progress that has been made under the financial inclusion. This is essential to understand that how much financial inclusion has happened in different areas. Okay, the financial services and products are accessible or not. Okay, they are usable or not, the usage is happening or not. Even if there is a bank and nothing, no function is happening in the bank, then we have the access but we are not using it. So there is access but not usage. But if there is much people that are going to the bank, that are taking their money out, that are depositing, that are taking the credit, so that means the access is also there, the usage is also there. The bank has great functioning, the bank is providing everything very efficiently, everything very easily, the bank has good communication skills, the people in the bank have good communication skills, they are taking care of the customers very well. That means they also have quality. So that's how these three dimensions are for the financial inclusion. Okay, there are 97 indicators under the three broad parameters, but all the indicators you do not have to remember, you just have to understand the meaning and the three broad parameters and their weightage that I have shown you before. Okay, now coming to the questions, this is the first question. You have seen that what is the index for this year, for the 2022 for the March, that you have to tell. Okay, this is for the March 2022, the index stands at what, that you have to tell. Next is which has the highest, which of the broad parameters has the highest weightage in the index, that you have to tell. Okay, so this was all. Thank you very much. I hope you have understood the whole news article very clearly. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.